What's good, guys? So today we're going to be doing our new week analysis, and yeah, let's jump straight into it. So we're starting this week today. This is Sunday. This is Sunday, the 20th of July. So we'll start our analysis on the weekly time frame. So if we zoom in just a bit here on this chart on the weekly, you see that this previous week pushed up and hit the highs of this week here, and it's coming back down and leaving a spike to the upside. Okay, so mostly just with that, you find that whenever we leave a spike, the new week that will start also tends to open up the new week there, and we'll go up, leave a spike before we push down. But it is important to note that for this current price here, if we look at the chart in terms of the trend, we find that here we started off there. Let me just do that real quick. Okay, so we started off there. We went up there, created a high, came back down there, created a low, went back up there, created a new high, came back down, and we have just been ranging around there, and none of the price hasn't broken this level. It's just been floating, hovering within this range from this high to this low that's right here. Okay, so this is all on the weekly time frame, and it's been raging since March till date, which is July. Yeah, so if you look at it, the new week is likely to come through, spike a little, then continue the drop to the downside. Then we shall wait for price to decide whether it wants to go and break to the upside, or if we shall break to the downside, retest, then continue to the downside. Shall wait for market to show us that. So that's what we've seen. Let's just mark out our levels, which is, this is our range high in terms of weekly trend, and then this right here is our range low in terms of our weekly trend. Then we can scale down to the daily time frame, and this is what we have on the daily right here. Okay, so on the daily time frame, market came down, so this is the order block that we left the time we whipped back and broke the structure here earlier, as we mentioned. So after we whipped up, we left this order block there with a little fair value gap. So we came back down, spiked up, hit this order block that's up there, spiked down, break of structure, and we tapped into this order block that's right there. And just after tapping this order block, price decided to whip up, and it broke this structure that's right here. So what would be favorable to happen here is for price to come back down, retest somewhere, and then push to the upside. Because if you remember, we cannot switch direction without breaking this level here that we didn't break. And after we hit the order block that's here, rather than breaking, price decided to instead break this level that's at the upside, and it left a double top up there. And as we all know, double tops only mean liquidity, meaning price is likely to come back up there and take this level out because there are stop losses and there's liquidity up there. So for now, we'll just wait for price to come back lower. So we'll wait for price to come anywhere from there to around here, this level right here. Okay, Then we'll start waiting for signs of a shift in direction from there. Oh, from there to up there. Okay. So before we start waiting for that, let's just scale back and let me show you an example of a trade that I took. So price hit this level, this order block here, or let me just mark out the order flow instead. So price hit this level right there. Okay, so if we scale down on the hourly time frame, this is what we have right here. So after price hit down there, hit there, we broke this level that's right there, then we went back down there, then we took the trade from there and we exited it right there. Okay, so how I know that we're going to switch direction, the steps that I mostly take when it comes to the decks is that I wait for such a setup where we'll start off with price. Let's say in this situation, price drops, almost like that, then the next one comes up like that, then move to the downside again. We tap into this level, okay, which is our point of interest. And right after tapping into that level, I'm looking at this previous high here, and I'll be waiting patiently for it to get taken out. The high that caused price to move and break this level. So in this case, push down, push down, tapped in, push down, tapped in. Then here we pushed again and tapped in. Because look, this move from there to there didn't break this low. So this became our no high that was responsible for taking out this level. So I marked this one right here. Marked it out from there to this side, okay? Then right after we broke there, I started waiting for. So in terms of confluence, firstly, we have price tapping into the point of interest, okay? Then we have this shift in structure here, this shift in the direction confirmed by this break right there, okay? And next we have another thing that I wait for. So let me just go back to this example I said. So we'll have our shift in structure there with price closing above this, level there. So now we'll wait for price to push back down this direction, okay? Preferably for me, I like to pull out my Fibonacci tool around these times, and I'll just mark it all out using the fib if it's performing on network. Anyways, I'll mark it all out with a fib, but I'll only take the trade at a previous order block or fair value gap that is at least at the 70% of this leg or below 70%. That's where I'll be looking to take the trade. And with stops, I'll take the trade around here, and I'll have my stops just below there, so that in case price decides to go to the downside, my capital is well protected. So for this previous trade, let me just zone in for you guys. Okay, so for this previous trade here, we had our shift there, okay, and right after we did that shift, price decided to range around here. It ranged. And if you remember, earlier I had mentioned that whenever price tries to leave a double top like this one right here, this is what is known as liquidity, and price tends to come back to it so that it can take it out. Okay, it's like another reason. It's like price giving you a reason for it to go back to the upside. Okay, so there we have our liquidity. So right after we left that liquidity there, another thing I'm waiting for is for price. Let's go back to our example this side. Okay, so another thing I'm waiting for is for price to come down from there to there. Then from here, I'll be looking to take my entry to this next level there. Okay. And another thing that I can add up to increase my odds of taking this trade is price taking out. If there's a minor level in this leg that's going up, if we have minor level right there and we take it out, we take out all the stops that are there, and that will act as confirmation for me to actually consider taking this trade to the upside. So in this previous example here, we had exactly that, and it happened right there. Okay, so price came up from there. We had our structure shift when we broke this level here, we came up, we started ranging around there, we left liquidity at the top, then we dropped, took out this inducement here, which is like more reasons for us to enter. After we took it out, we came back, tapped into the fair value gap that's there in the order flow, and at the same time we had a Quasimodo here, which is a double bot head and shoulder pattern. You should, in case you're not familiar with them, you should just go to Google and search up trading chart patterns, and you have sort of a template. Okay, but I'll consider making some videos that start from the beginner level so that you can follow along. Or I can start that series this week. I'm sure by the time we get into Wednesday or Thursday, I'll have everything all uploaded for you guys, okay? Okay, so let's continue. From there, we tapped into that level, okay? So after that happened, what I then did next was I scaled down to a lower time frame, which is in my case 15-minute. Scaled down to the 15-minute. Oh, where's that part? Okay, right there. Okay, so after I scaled down to the 15-minute, I'm now looking for exactly the same thing that happened earlier. I'm waiting for it to happen here again, okay? Same thing where we had our shift, liquidity. Here when we came back and tapped into our order flow there, we had our shift right there, okay? This one came down. So we're moving as lower high, low, lower high, low. This took out that, so this is now a new lower high. Then we came in, tapped into our order flow there, went up, lower high. This failed to make a lower low, okay? But then if you look closely and you're very diligent with your analysis, okay, and you pay attention to your details, you'll notice that we have a double bottom here, which is a sign that price will come take it out later, which actually happened here later on, okay? But let's not focus on that for now. Let's look here. So we had this being our lower high, okay, and this is our previous one that caused a break. So we'll only consider shifting direction when this one here is broken, okay? So You can mark that out. I marked this price out from there to there, okay? And after price broke that level, we came back, tapped in to this order block right there, okay? So this would have been the optimal place to take this particular one from here, and then aim for, you take it from there, from around here, eh? Then you aim for this area around there. But for me, I missed this one, okay? So instead, I waited for this I found price hovering around there. So I was like, okay, this price here has been taken out, eh? So the next thing I'm going to wait for is for price to like try and retest the order block here. But this was too close, so I was like, let me just wait and see how it reacts and how to treat this level. Then price took this level out, then it spiked back down. Once it spiked from there, I placed my pending order right here at this level, at this order block. When price pushed down slightly more, it hit me and I was triggered into the trade around here with my stop loss just below this double bottom. Mind you, this is a double bottom, meaning price is likely to come take this out and take out my stops. So with that in mind, my take profit, I had to place my take profit somewhere that's nearer. Okay, so I spotted this liquidity up there. Okay, but knowing that that's liquidity, it has to be taken out. So one of them will be taken out before the other. Between this liquidity up there and this one of them will be taken out before the other, and I can't start guessing which one it will be. So instead, using the same chart patterns, I ended up drawing up same head and shoulders. From there, I marked that out and just stretched it out and considered, rather than placing my stop loss up at the top there in case it doesn't get there, I will place it when it gets to this range here. If we look at this chart on the 1 hour, these are spikes. So I placed it just at the bodies where the spikes are beginning. That's where I placed my take profit, I mean. So I was triggered in there at the body of this order block around there. I was triggered in from this body right there. And my take profit was right there at the beginning of this zone, just up there. And my stop loss was there. And price just shifted direction and just moved to the upside. Hit my take profit, and that was it. And after that, you can actually see price did decide to take this level out, this double bottom and this double bottom, wiped them, then price shifted direction to the upside and continued its move to the upside and took out this liquidity that we spoke about earlier. And right after doing that, let's just shift to the higher time frame. Let's go for the 1 hour. Right after all of that happened, after all that happened here, price has just been trailing to the upside non-stop. Another area that would have been nice to consider is after this level was taken out, then we'll wait for this here, this retracement, then take our entries from there and just keep holding to the upside. But yeah, it was a very nice week. I took a couple of trades on this from there to there, and also when I spotted this flag here, I took a trade from there and closed it there. Then when we broke out of this flag setup that was made here, look closely, we had a flag here. Right after we broke out here, and I had this retest right there, I took this trade and had my stops up there. down there, floated, came, I took profit up there, then we made another flag and I took my profit right there, right after we broke that level. And that was it for me for this week for Dex 1500 down. I just hope you've learned something new, and if you have, please do consider leaving a like, thumbs up, and subscribe, and turn on the bell icon so that you don't miss any single video, because I will be uploading very frequently from now on, starting tomorrow. Yeah, I'll start the beginner series tomorrow so that we can start from scratch with Dex 1500 down